My guest today is Stephanie McCullough. She's a financial planner at Sofia Financial, and I'm very excited to speak with her about topics related to behavioral as well as personal finance. Stephanie, thank you so much for being here. How are you?
I'm doing well, Dylan. Nice to be with you.
Awesome. So I thought it would be a good idea to begin with your background. So what inspired you to help people make wise financial decisions, and could you elaborate on the specific work that you do?
Yeah, so I consider myself a holistic financial planner. We do investment management. We do, some life insurance and long-term care insurance, but mostly it's looking at someone's entire financial picture and helping them, like you said, make good decisions about what to do with, unless you're Bill Gates, you have limited resources. So what to do with those limited resources to get what we're trying to do. So it's been quite an evolution, right? I'm almost 24 years in at this point. It was a career change for me. I had been working in Washington, D.C., and my husband and I decided, if we decide to have a family, it might be nice to be near the grandparents, which would be in the suburban Philadelphia area. And then he got a job offer, and I was like, oh, shoot, what am I going to do up there? Maybe I could go work with my dad, because my dad was a financial advisor for my whole growing up, and I grew up not wanting to do what he did. And then here I was like, hey, Dad, maybe I could come work with you. And luckily, he had a whole bunch of retirement plan clients, so I could meet with people one-on-one and discuss things without having to be in a sales situation. Because a lot of the kind of on-roads to being a financial advisor involve calling everybody you know and trying to sell them something. And I would have lasted about a minute and a half in that situation.
Excellent. So previously you mentioned when we spoke earlier that one aspect of this entire topic that fascinates you the most is the behavioral finance, or the psychological aspects behind why we're inclined to make poor financial judgments related to spending or saving or investing, among other things. So can you pinpoint one root cause of that, or what is the primary reasoning behind that?
Yeah, it's so fascinating. There's this whole field of behavioral finance, and in fact, 2 Nobel Prizes in economics have been awarded to psychologists for bringing the insights of psychology. Like, traditional economics and finance believes that all humans are totally rational, and they coolly weigh the pros and cons of every decision, and they make their decisions in their self-interest. And then the psychologists came along and they're like, you know what? Humans aren't completely irrational in any other phase of life. Why would they be completely rational and non-emotional and, thinking about other factors around money? That's just crazy.
Right.
So they've documented all kinds of ways that we make kind of shortcuts in our thinking, and sometimes they're to our favor, but a lot of times in money, which is a man-made system, they don't work in our favor.
So one of the first thoughts that comes to mind when I think of decisions that might set someone down the wrong path of financial irresponsibility is procuring an overwhelming amount of debt for something that might not have a great return on investment to begin with. So I wanted to ask you, from your experience in dealing with a lot of different situations with your clients, do you think that there's a distinction between productive debt and unproductive debt, or should all of it be avoided at all costs? Because I've heard it argued both ways. Like, for example, you could leverage the debt to establish a good credit score and so on. So I'm just curious to get your take on debt in general.
Yeah, the way I think about debt is a timing issue, right? Like, if I earn a paycheck today and then I go out and spend it today, they both happened in the same time frame. Mm-hmm. But if I spend something today that I can't afford to pay for, I have to use my future earnings to pay for that thing that I've bought today. Mm-hmm. So it's a timing issue, right? I need to get that money from somewhere because I got to pay that bill. Well, I'm going to borrow it from someone, and there's a price for that. I'm going to have to pay interest. So that's how I think of debt. Ideally, it's better to be in a situation where I'm using today's income, or I'm using yesterday's income. I've saved up the money for what I want, and I'm using yesterday's income to pay for today's things. But that's not going to happen in a lot of cases, right? The classic example is student loans and education. Well, as an 18-year-old, I probably don't have $50,000 or $250,000 or whatever it is for education. So then you have to make that decision, right? Like, okay, if I'm using my future earnings to pay for this thing, how likely is it that my future earnings are actually going to be able to help me pay for that? Or, is there going to be forgiveness or other things that might come along? But, I would say potentially something like education is going to make you more employable, maybe, help you earn a higher income in the future. Something like a couch or a trip to Jamaica, you might enjoy them, and you might enjoy that couch for a very long time, but, then you have to make the decision, all right, how am I going to pay it off? How long is it going to take me to pay it off? And when you look at the price tag on that couch, maybe it's not $500. It's $500 plus all the interest you're going to pay until it's paid off. So you have to factor that into it as well when you're thinking about the cost benefit.
Mm-hmm. Yeah, speaking of interest, what do you think about the different strategies that people will go about when paying off debt? Because some will try to do it faster so that they don't have to pay as much interest in the long term, but then the payments will be larger, so that would sort of restrict what, there are other forms of spending. So do you recommend different strategies of paying off debt based on the individual person, or is there like a general rule of thumb? Like, would you recommend paying it faster just so you can save on interest, or is there another way to think about it?
I the first one you said, right? To me, it's always a custom situation. Mm-hmm. I don't think a lot of that one size fits all advice is. I mean, yes, it's helpful to have rules of thumb in your head, but then you have to adjust based on what you've got going on, right? I mean, if someone's got student loan debt and a young family, maybe they've got to pay for daycare, maybe they've got to pay these things, right? Mm-hmm. I mean, or if they're a single person living on their own and they're able to live on ramen noodles for a couple years, right? Pay that debt down, and then you've got more flexibility in the future. It really depends on the situation. Definitely, I would say, one thing that's for sure true for everything is if you can look at your different debts and you've got to figure out the interest rate on each one and kind of the terms. Like, if you've got federal student loans and something happens to you, you pass away or you become disabled, they're going to be forgiven. Like, they're going to be waived, which is nice. If you've got credit card debt at 22%, that's probably what you should prioritize first, right? So if you're looking at different types of debt you've got to know those details before you figure out, what am I going to put my extra dollars towards first to knock that one off so then I can address the others.
Mm-hmm. So sort of getting more specific into student loan debt, there's been a lot of discussion around this, especially in Washington recently, and the two different sides to this debate. On one hand, you seem to have people who fully support canceling student loan debt in its entirety because it would allow for less financial stress and more opportunity, and then there are those who argue that canceling student loan debt is like, sort of like a middle finger to people who actually made sacrifice. Like, maybe they didn't live on campus so they wouldn't have to take on as much debt. Maybe they cooked all their own meals so they didn't have to have a meal plan or something like that. And then they might also argue that, it will allow universities to increase their tuition prices exponentially more because the government is, would foot the bill for it. So, there's the two different arguments to that debate. So what's your take on, the general student loan forgiveness, and if you were advising someone who's considering different options related to to financing their education, what would you say?
Yeah, I don't feel qualified to make policy recommendations. It's such a sticky
Mm-hmm.
one, like you said. Like, there's different fields of it. I mean, I've seen people that are totally saddled with student debt, and then the worst part is folks who maybe got caught up and weren't able to finish their degree, mm-hmm. and they've still got the debt without the degree. Like, oh, that's just so painful. I don't pretend to have the answers to that. But like on a one-on-one situation, if someone is looking at, okay, how am I going to pay for education? There's kind of two situations, right? If you're through school and you've got the student loan debt, how to deal with it, or if I'm looking forward at how to effectively pay for it, or a lot of people my age are thinking about for their kids, how are you going to fund that? I would say try not to get caught up in this idea that only a degree from a fancy name brand university, that's the only thing that's valuable. There are a lot of schools in this country. There's probably over 3,000 colleges in this country, and you can get an excellent education at most of them. There are schools that cost less money. There are schools in different parts of the country that might be willing to give some financial aid, even if it's not, need-based and not qualified on income. They might still give some merit aid because they want a tuba player who happens to be a knitter, whatever it might be. You never know. So if you cast a broader net of opportunities, you might find things that are more cost effective. And I would say don't discount the whole community college option. My best friend in California, both her kids went to 2 years of local community college and then went to wonderful name brand universities, and they have degrees that cost a fraction of what they would if they had been there all 4 years.
Yeah, those are great points. So sort of, wrapping up, I have like this larger scale question. I wanted to I'm curious to get your opinion on, there seems to be this balance or, this tension between the purpose of individual responsibility, like we've been talking about, and government interventionism when it comes to someone's financial situation or addressing the issue of inequality. Or I suppose another way you could phrase it is, to what extent do you think the government is responsible for what happens in your bank account? And because again, we hear a lot of different perspectives on this. Like, you have people like Dave Ramsey saying what happens in your house is more important than what happens in the White House. And there are people who say that more aspects of our lives need to be, government funded, and that one's success depends on that. So do you, obviously, there's probably a balance between both of those, but do you think that one surpasses the other?
Ugh, that's another big kind of thorny question, right? I mean, I think another way that traditional economics falls down is that they kind of, at least in the theoretical sense, believe that there is a level playing field and that it's even and that everyone has, equal opportunity or access to things or ability to make decisions. And we know that is baloney, right? That is just not true. Certain people do have privilege and ability to, whether it's get education or, not have to work through school or, there's a million examples, even the types of job opportunities that are available to them. So it is not a fair world.
Right.
And how do we fix that? I'm not sure. But one thing I want to show you, which is something I talk to my clients a lot about, I'm going to grab something from behind me. There's this guy I follow who has a way of putting things in cute little Sharpie sketches. So there's a lot of things out there in the world that matter, and then there are the things that we can control. So, yes, advocate for policies that are more fair and equal, demonstrate, write to your congresspeople, all of that, run for office. And, from a personal finance perspective, look at what you've got to deal with. And, so there is some personal responsibility in there. Okay, I wish I had a lot higher income, but given that this is my income today, what is feasible for me? What can I do? How can I put some money away for the future or deal with past debts? Kind of one of the most dangerous words in personal finance is deserve. Like, kind of, when I'm looking at my own spending, like, I deserve it. I deserve to get my nails done every week, or I deserve to get my hair done a lot, or I deserve those fancy new shoes. Like, okay, yeah, you deserve happiness and comfort and peace. Does it come in the form of a fancy pair of new shoes that might, go on your credit card and cause you trouble for a long time? One of the things that I like to think about is core desired feelings. So there's another guy who does behavioral finance, and he talks about how everything we buy has 3 levels of value. One is the utilitarian. So those fancy new shoes are going to protect my feet when I'm walking across the rough ground. The other is emotional. Maybe those fancy new shoes make me feel like a badass, and maybe that makes me ace my job interview or whatever it is, right? That can't be denied. But the third is also expressive. What do I think these shoes say about me to you? So if we can bring some level of awareness to our motivations, like, oh, I really want those shoes. Right. Why? Is it utilitarian? Is it emotional? Is it expressive? Often it's a combination. Not to say that there's right or wrong, right? I am the non-judgmental financial advisor. But if we can bring a little bit more awareness to our motivations, maybe that can help us make decisions that stand up better in the long term.
Yeah, I think that's really interesting. The way that we feel we're perceived, and the status that something materialistic might provide to us. That it's very, very interesting. Just final question: do you have any? I know you gave a lot of great advice there, but if someone just wants to take the first step in being financially responsible and like perhaps it's planning long-term savings, or especially considering this past year of a lot of like financial volatility and stuff. Are there any specific habits you would recommend to people, or just one piece of advice that would like reduce financial stress and encourage responsible decisions?
Yeah. I really think step 0 in personal financial stuff is self-knowledge, self-awareness. And that comes in kind of 2 forms. One is like, what am I trying to build? What do I want in life? What is most important to me? What are my values? And then you want to try to align your dollars with your values, right? Maybe I live in a community where everyone drives a fancy car, but is that my value, right? So that kind of work. And then also number 2 is the kind of self-knowledge of like, what are the emotions that money brings up for me? What are my patterns? When do I tend to go off course? Like, I'm only going to spend this much a week, but darn it, when my friends call me up and want to go out to happy hour, I'm embarrassed to say no. Like, what are my patterns? Sometimes journaling helps, writing it out. Like, oh, I just felt really anxious about making that decision. To me, journaling helps. Instead of spinning around in my head, I actually go somewhere with the conversation. But I do feel like that self-knowledge is kind of the essential, like I said, step 0 before you can then decide where to give, where to donate, where to spend, where to earn, where to save. That's going to give you the information that should reduce your stress, because then you're clear on what's most important to you and where you might stray off course.
Awesome. Very well said. Well, Stephanie, I can't thank you enough for talking about this with me today. I think it was a very interesting conversation, and I hope that other people can also benefit from hearing it. So thanks again, and be well.
You're welcome. Thanks, Dylan.